Well, our market monitor guest tonight likes to buy stocks that are the innovative part of the stock market, the high growth companies, but also high risk to some degree. Mark Lehmann is president of JMP Securities, an investment bank based in San Francisco. Mark, how are you doing?
Good. Thanks for having me on the show, Bill. I appreciate it.
You're an individual stock picker, but overall, do you see this market going higher? What did you make of the volatility this week?
I thought it was an interesting bit of action this week. Clearly, we had a tough January, which surprised a lot of investors. I think the consensus, obviously, going into 2014 was that bonds would be weak and stocks would probably continue to be higher. And that's obviously not what happened in the first part of the year. But fundamentals were somewhat decent this week, and I think investors really saw opportunities for some equities. And some of these high-growth companies that we're about to talk about really put up stellar fourth quarters and really are the shining stars of the market. And we see that continuing through 2014.
I think it's really interesting, your list of companies that you're going to talk about, Mark, because most of them have gone public a year ago or less, and you already are raving about them. So let's go down your list. The first one is Tableau. The ticker symbol here is DATA, D-A-T-A, and it's trading on the New York Stock Exchange. It went public a year ago. Tell us why you like this and why investors should put money in it.
Well, it's playing in a huge market, data and data analytics, and it's a market that really hasn't had a lot of innovation over the last few decades. It's a terrific product. It's a large growing market. We see that as about a $13 billion market now, growing to about a low $20 billion market in the next 5 to 6 years. They have a very small market share. They're growing it very, very rapidly. And if they get their natural market share, this stock, which albeit being expensive, and you can see has done quite well since it's been public, will continue to do well, gain market share, and we think will be a winner.
Here's another one, Workday. They're in the human resources and finance business. That's a pretty competitive field.
It's a big field, and the ERP market is one that has a lot of incumbent players. The management team, Dave Duffield, was a big executive at PeopleSoft, which we all know, and in 5 years there, he grew the company to get 5% market share. If he does the same thing here, he's competing against incumbent players like Oracle and SAP, who combined have a $250 billion market cap in all the businesses they have. And if they get their natural market share, as they are also growing about 100%, this could be an extraordinary company. It already is. But be it an expensive company, if they gain that kind of market share, this stock's going to keep going higher.
As you've been saying, if this, if that. These are risky stocks, and they're not for people who like to sleep at night easily. Let's talk about your next one, Aratana. I hope I'm pronouncing that right. Therapeutics. Right. This pet. It's a company that's dealing with healthy pets, right?
Well, healthy pets, and as we all know, pets aren't always healthy, and we also know that people are going to extraordinary lengths to make sure their pets stay healthy, and if they do get sick, they're going to some other lengths to make sure that they get back to being healthy. That is a market that has grown absolutely in recession, in good times and bad. The pet market has never stopped growing in the last 30 years. The management team is stellar. They've got an ample capital to grow the company. They also something we really should pay attention to is when you take a life sciences company that's focused on the human market, the product to get to market takes hundreds of millions of dollars to get to market. When this company takes products that are going to go to the pet market, it takes tens of millions of dollars to get to market. So the cost to get to market is lower. You have a very, very wide open playing field. They are the #1 player in that market, and I think great things are ahead of this company.
Quickly, all three have done very well the last year. Are they vulnerable, though, if there is a definite market downturn?
There's risk and there's reward, Bill, as you know, and these stocks have done extremely well, and they're also trading at premiums to the market. But with their growth, I think buying a full share today, putting all your dollars to work tomorrow, probably not a good idea. But these are the winners. These are the companies that we think are going to do extremely well. JMP has followed these companies, obviously, since they've been public, and they've done nothing but exceed their expectations since they've been public.
Any disclosures on your part?
We've done investment banking work for all three companies proudly, and I don't own the stock personally, but I do think these stocks are going higher.
Mark Lehmann, president of JMP Securities. Thanks for joining us tonight.
Thank you both.